Okay, so welcome back to module 3 of the Apex Trades course, right? So today we're going to focus a little bit on multi-time frame analysis. So, you know, taking all of what we've kind of foundationally built from the first 2 modules, all about market structure, how we kind of use multi-time frame analysis and what it kind of all means when you bring it together. I'm going to start off just by showing the daily swing points, right? Because I think it's important to note. So if you look, the daily swing points, we're on the 4-hour chart right now, and I've just marked, you know, higher high, higher low, higher high, higher low, higher high, and then we get a trend change there, right, with a lower low actually. But it's important to note that when we're on the daily time frame, okay, it's really clear, right? You can clearly see that, you know, if this was the starting point, we move up, we pull back, we move up, we pull back, we move up, and then we break the change on the daily time frame, right? When you analyze your daily time frames, what I'm always looking for is where are we relative to that deepening position, that pullback phase. Always thinking about this pullback phase, because it's the pullback phase that gives us our edge. So when we've identified that we are physically in a trend, you know, it's the pullback that you look for continuation, right? And longs, you know, each time we come back, how far do we deepen into that correction before we want to start going long? Now, you know, there's many ways to kind of figure out where that needs to look. What we're never going to know is whether it's 25%, 30%, 50%, 75%, or even, you know, into the 90, 95, 98, 99% correction before it moves to the upside. And that's simply because we're not in control of the market. We're just trying to play on the same side of the market, right? And so that's why we always want to have the framework to figure out, relatively speaking, where we are in that trended range, right? And so the higher time frames always give you that visibility a lot easier than, you know, the consolidation and the accumulation phases that you tend to see on lower time frames. So I just wanted to kind of point that out. They're the daily swing points, right? I'm not marking them out as major market structure because my time frames is 4-hour, 15-minute, and 1 minute for entry, right? So let's go back into the 4-hour, which we are in. And we're just going to look at some examples of, you know, what we can kind of detect and see. So, you know, let's bring our 4-hour market structure onto the page, which we've depicted, right? So we know we can keep going as far back as we need to, right? But you can see right now we're kind of in this move where we've broke, which we know is a daily, yeah, because we've just looked at that. But that's a daily low, right? That's a daily, what was previously a strong low, but it's broke, right? So I'm just going to call this something like daily trend change, right? Something like that. Just so I know that that's absolutely clear in my mind that was a significant point at a daily level. But of course now it's always around, you know, where do we want to go to and where does the price want to go? Well, obviously the 4-hour, we're always expecting that kind of pullback phase. But it's interesting when you start to look at the multi-time frame analysis, it really starts to open things up. So what I'm going to do, again, I'm just going to revert to the diagram that we initially went to, which I think I've deleted, but we'll wing it. And so the idea and the art of this is really to understand when is the optimal points to trade, even on the shorter time frames like the 15 minutes, right? But if we've got obviously 15-minute, you know, we're making moves up, and then, like I say, that point, that's where you get your trend change, right? And how far we retrace back on that 4-hour move, because we know this on a 4-hour is just a move up, move down, and then of course a move back up, right? So on the basis of that, if we were to overlay that with our 4-hour, you know, you're gonna have, that's your swing point, right? Again, like we say, keep doing that. There's your swing point there to the top. There is your move down, and then of course you finish off with that there. So make that a different color. We'll make it let's make it dotted actually. or in fact, to make it a little bit clearer, let's make that a line. Let's make it a lot thicker. Okay, and then let's make that dashed or dotted. Right, so as I say, we know on the way we do our kind of points that we're going to have it's going to be bullish, 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 bullish. There's our swing points. But then on the 15 minute, as I said before, we can do this each time. You know, let's just change the color of that to that. You know, we're making bullish higher highs and higher lows. Get our swing point. Still go green, but then of course we flip because we make a break. And now hopefully by now this should become relatively entranced in your mind, right? If you've watched the video so far. So obviously we make the breaks there, just doing this very quickly, and then we get a swing low there, but then of course we get that trend change again. So just to finish off, that would be nice, back to our green, and then we get the trend continuation, right? So let's finish that off. Higher high, higher low, and then onto it. And then of course, just where we are looking to enter, that becomes a 15 minute up, 15 minutes up. We fail to make a new 15 minute up, so then we make a 15 minute trend change, right, down. So that's a trend change. So what's for us, right, if we're monitoring the 4 hour move, right, and we're going to try to find some examples of this, but if we're monitoring a 4 hour move like that, first thing we're looking on the 15 minute is that kind of first trend change, right, that failure to break to the upside. First time we get that trend change, what we're going to cover in the next session is the supply zones, right? So where are the supply zones where price is likely to pull back into for us to continue that move to the downside? Always think in your head about where the 4 hour is likely to go relative to its own position, right? That's the multi-time frame analysis mindset. Knowing where we get the trend change, knowing where the 4 hour is likely to be heading, and then that's how we take advantage. So if we're executing a trade on the minute time frame, when we get into here, again, we're going to focus on supply and demand zones in the next video, but this is where we really get to the crux of our multi-time frame analysis. I probably could have maybe made these into 2 videos, and this one might not be, you know, a long video in itself, but obviously marking that first trend change is a nice thing to be able to do, because it's the first clue to us of what the likelihood of the continuation might look like. Okay, so let's just go 15 minute down. And then what do we see? Come to the bottom, which is probably the way we'd anticipate it, is a demand zone that is formulated somewhere here, which prices came into tag for the long, and that realignment of that trend continuation, right? And so then we get a new trend change, which is a 15 minute up trend change. And then we just get that same structure, right, where it's just nice upward move. And then just to finish that off, we get our 15 minutes up. And then from our perspective, the 4 hours, so that's the 15 minutes. So each one of these is effectively a range, right? So there's the first range. Then the second range is here. Oh, it's here. Third range becomes this. We fail to break to the high. Next range becomes this. Where we're trading, and then each time we create these new points on the chart, these swing points, that's effectively where we're trading our range, right? And we're always looking for, you know, that same fractal pattern to be playing out, the upward downward movement in and around a higher time frame move. Now, my specific ideology on trading is 4 hour, 15 minute, 1 minute for execution. You can look at doing something like 1 hour, maybe 1 hour as your higher time frame, and then go into the 1 minute for your, or the 1 minute, the 1 hour 15, 1 hour 5 minute, 1 minute. It depends on how you trade. If you want to trade a little bit more tighter, I'd like to look at the analysis on the 4 hour because I think it paints a better picture. Then of course we have the main structure, which is the low, which is what, hopefully if you understand from the previous video, that you would know that that is a strong low, right? But that would be, don't have that saved as a strong low. Style would be line, and then we know from our previous that is a weak high, right? Because we are continuing the trend. That breaks, that becomes a 4 hour up. Now there's no trend change on the 4 hour at all, is it? We just move up, we pull back into a demand zone, and then we pull back again. So that in essence is how we are gonna, how we're analyzing the charts. But how can we kind of take what we've just seen there into the actual chart in itself, and can we see any examples of this kind of idea? And so if you think about it, if we look at, I have to draw some lines, right? So we start off here, so we've got a point of control. The move that was down was effectively, let's see, would have been, that's the first candle, so it would have been there, right, on the 4 hour, and the range would have been there, right, and there. Where was the, let me just move that out of the way. Yeah, that would have been the range before that break. And so we made a trend change here, and so if we just dive in onto the 15 minute to that point, see if I can find it. Let's look at what happens, right? So price comes down, we make a high, so we just mark that with a green dot, which would be that, yeah. And then, so what are we waiting for now? At this moment in time, that's the low, and that's the high. This is a 15 minute though, right? So we want to just do that as a dotted line. And then, of course, we make a new high. So this is what we'll call, initially for us, just a 15 minute high at this stage, because we haven't, this is the first 15 minute point of the 4 hour leg, right? So it's neither a trend change or anything, it's just a 15 minute high as far as I'm concerned, right? A breaker structure. Okay, so what was the candle that created, so this candle here, but what created it, it was here, right? So now we get a trend change, right? That is our first trend change, so we denote that as a 15 minute down trend change. So now we get a trend change. What are we looking for? What exactly is our understanding? So we've made some moves up. There's actually a 15 minute one here. If we want to be extra clever, so we make a high, we come back down and then break it again. So there's a high there, right? A 15 minute. So we make a series of highs. You could argue very tightly that was a high, we pull back and then break again, so there'll be another high there. So you have a series of highs that came in. And so whenever we're in a trend, what we're trying to do is, when can we find an opportunity on the counter trend, right? Or do we want to take advantage of the trend on a pullback? Now remember, always around that kind of, not always, but for me, I like to look at between 30 and 50%, 30 and 70%. Ideally over 50%. But what I always try to find, and again, this will all come together on the supply and demand side, right? Once we do that on the next course. But, once we make that break, which was created by, so there's the legs there, that was the last up move. So that would be the range. And then where does that fall? Falls down to there, right? So what are we looking for? Where's our trader's opportunity? What do we know to be true, or what we expect to be true? So you always expect that once we get the trend change, 15 minute trend change, we are hoping and expecting the price is going to come into its previous range before another break, right? So we've seen a trend change. Hopefully we expect a separate change. Now that happens, right? And so if we look, I'm just going to give a teaser, right? We know that this is a supply zone, right? This is where we expect price to get rejected or additional orders to come in, because we've got this candle here that's big engulfing candle from the previous. But we want to find ways in which we can articulate that a bit better, right? So I'm just going to, for the sake of it, map this as a small 15-minute supply zone, right? And so once we break, what we're looking for is, do we come back up to test this zone, right? And so you don't just blindly enter here, but we know because of this engulfing candle and the imbalance, which we'll cover on the next session, that we hope that we're going to get a tap. We've seen that trend change. That's our first clue. Second clue is when we retrace, where are we going to retrace back to? And so what this has shown us from a multi-time frame analysis, right, we expect, we've made a push down, we've made a trend change here on the 4 hour, right? So what's been going up, 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 been making breaks to the upside. We've now seen a trend change on the 4 hour, right, which was here. That was a trend change on the 4 hour. I don't think I've got the template for that, but let's assume that that's a 4 hour trend change, right? So now there's our first clue. Okay, we've been bullish. Now we've had a trend change. We're expecting a pullback. Clearly the pullback at this stage was not a large one or one we would want to see. In fact, if we just test what that is, it's above 30%, right? It's not ideal. I like to at least go 50%, but it's still within that kind of potential. It's always going to really depend upon how much force, I guess, the market's got in terms of its drop. Sometimes it can pull back, sometimes it may not, but clearly it's still pulled back, at least 30%. And so obviously from our perspective, now that we've seen the trend change, we're expecting on the 4 hour to get that second 4 hour down candle, right, or 4 hour down move, and even continuation. And of course we trade that way until such time that we get a new trend change to the upside. But going into the 15-minute, what this has given us is that them intraday or daily opportunities within them 4 hour ranges, right? And so, okay, if we agree that we've gone into the 30%, and that for whatever reason we say, okay, well, now I'm interested in the trade, let's look. Just to recap, we pull back, make our first 15-minute up candle after a series of huge blood that came into the market. And we come up here again, then we just range, because realistically what you've got to say is, well, what was the candle that created this upward move? Well, it was this, right? So that would have been your range there on the 15-minute, which we'll change to dotted line. When you get that first break, so you trade in the trend until such time that it breaks, you get that new high there, which we talked about, created that swing point there, and then we broke down, got another kind of swing point now on the 15-minute after the trend change. We got the pullback into a supply zone, which was perfect. Comes back down. Where's our new range? Here. That's our new break. Nice and easy. What was the break that created that? It was here. So now we come back down there. Where do we trade into? Back into that supply zone. Perfect opportunity again. We break structure again. This is where it becomes really nice to trade, in these scenarios, because even like last time, if you remember, I was putting and I do this once I'm trading, but you can just see quite easily where was the move that created it. Well, that was the move, right, from here down to there, broke this structure, so that becomes your new structural high, which you expect to be strong. Where do we break to? Right into that supply zone, bang, down again. And so it's like the multi-time frame piece is like, okay, well, this incidentally then becomes a 4 hour break of this 4 hour, right? And so here's where we've got that multi-time frame piece kicking in nicely here. So we've got 15-minute trend change after a 30% pullback, 15-minute trend change, 15-minute down break, another 15-minute down break, another 15-minute down break, and then a 4 hour down break from the 4 hour candle structure. And we absolutely expect that the weak breaks, right? Because in a bearish market, the lows are weak and the highs are strong. In a bullish market, the lows are strong and the highs are weak. And so we expect that this is going to break. And so when you're getting into these trades, and so pull back, break, pull back, break, pull back, where we're getting into the play is on that pullback high on the supply zones, right? Again, we'll cover that in the next video. I'm not going to say that again because I think you know right now that we're going to cover that in the next video. But basically, once we break, you know, where are you going to hold this trade to? If you get in this trade, yeah, where are we going to hold that to? Well, we're going to hold it to here, right? To that break. That's where we're going to hold it to. That is always going to be really where we want to hold our trade, to the higher time frame weak point, whether it's the high or the low, whether it's bearish or bullish. We know where we're going. It's just how far we can catch it. Now, what's the first clue? The first clue is the trend change, right? Not the break, not the 15-minute high, the 15-minute high. It's the 15-minute trend change, right? The TC, okay? Once we've created our first trend change, well, then the next one is just going to be a down break, down break, down break, okay? And then obviously we come back up here, theoretically, even though on smaller time frames, where's our range? Our latest range is here, okay? And you can just follow this. This is another perfect entry. So we came into here, and then what happens? Get a small sell-off down to the 4-hour. But this for me is just one move within a 15-minute range, right? But then of course we break again, and so even inside of the even though this is a wide range, there's still you still see a lot of these opportunities where we break, come back up for a retest, break, come back up for a retest, don't quite break here, but then we smash through again. So once we're confirmed in a trend, you know, having that kind of 4-hour and 15-minute analysis really helps you guide your path on where you're going to get your trade executions and where they're going to go to. It's almost like when we're putting all of these different things together, right? So obviously covering basic market structure and then into the advanced market structure, followed by the multi-time frame analysis. That's all kind of one piece where it really, it's like a pyramid, right? Starting off with the base layer and moving up. Once we start to add supply and demand into the conversation and liquidity concepts, it formulates a map in your head. I almost consider it probably like when you learn to play the guitar, right? You learn to play the guitar, you learn a few tunes and you're copying off people, right? You keep on copying off people, you learn how to play a few songs, and then you crack the code, right? You then learn scales and keys and notes, and then all of a sudden the wheels come off because you can see the framework, right? So then you can start being inventive and creative about how you play the guitar. Well, I kind of feel like what we're doing at the moment is kind of, with market structure, it's like learning scales, right? We're learning the basic foundations. We're learning notes on a guitar fretboard. When we get to the point where we kind of become very confident and quite fluid, a lot of this, what we're seeing here, I don't want to say goes away, but it becomes a lot more automated. You can kind of just see, like, even though I've got these penciled out and drawn on the 4-hour and the 1 hour, and a 15-minute, you kind of start to see this all fluidly, in my opinion. Eventually, you get to the point where you just start to see the patterns and where they emerge, where the liquidity's riding, whether we're going to break a zone because liquidity's either been taken or not. Where does that big buy to sell move? So that move that, you know, generates a lot of liquidity over a consolidated period, and you'll see a flush out as a buy to sell, right? So create all the liquidity, drop that liquidity, turn stop losses into buys, turn aggressive sellers who are waiting to catch the breakout into buys, effectively for the move to then get reversed and continue its trend change, or continue the actual bias to the upside. So there's a lot of this kind of stuff that we're going to cover in the next sessions, and the point I'm trying to make is we'll dive a lot deeper into the multi-time frame analysis, because that's where really I can go into a lot more detail. Like, I'm missing out key concepts at this moment in time, like the supply and demand, like liquidity concepts, because I don't want to jump the gun just yet. But what I do want to get across is that always have that relative sense in your head. Because of the fractal nature of markets, whatever time frame you're trading, always remember there's a higher time frame that sits behind that is also playing that same wave game, right? Higher highs, higher lows, breaking trends, and that kind of thing. And so I always like to think, even though the majority of the time I'm in the 15-minute and 1 minute for execution, I've always got my mind on that 4 hour relative to where we are. Like if we're in the middle of a range on the 4 hour, great, okay, well maybe it's consolidating, kind of look for small opportunities, looking at liquidity and looking at where supply and demand is in that range. And I'm fairly safe that I'm probably not going to get a huge breakout, or there's some significance to how I can trade in that way. The moment I start to get close to a 4 hour high or a low, whether it's weak or strong, it changes the mindset for me on how I'm going to trade and the way I enter the actual entries in that trade as well. So let's say we'll cover that in a separate video. This was just a quick one. I know I've absolutely killed it with like a lot of time on that first session, on that second session. It was a lot to cover, but it's crucial that you get that piece down before you start getting into this. And so that's hopefully a quick one. And how long were we? 31 minutes, not as bad as an hour and 45 anyway. So thank you guys for sticking around. I shall see you in the next one.